everyone, this is Vishal from Equity Guru, and let's talk about the rally in the stock markets. And of course, this all started essentially last week on Friday the 21st. I want to get my dates correct, but it was a popular Fed watcher wrote an article talking about, that the Fed is now going to be less hawkish going forward. It sparked a pretty big rally to end the week on the equity markets. And as you can see, this week we are continuing that momentum with basically at time of recording a third green day in a row. And you can see what the mainstream or the financial media, is talking about. NASDAQ leads Wall Street higher on hopes of less hawkish Federal Reserve. So already this idea that, I guess inflation is going to be tamed with the Fed reducing the large interest rate hike. So basically, instead of 75 basis points per rate hike, which they've been doing in the past Fed meetings, maybe it'll be less than 75 basis points, maybe 50 basis points. And if you take a look at the Fed Watch tool on the CME group, that's sort of what the market is expecting, right? There's a 100% possibility here of another 50 basis point rate hike essentially in next week, November 2nd. So this is basically what we want to talk about heading into the next Fed meeting for November. Highly anticipated. By the way, for my Canadian viewers here, we're recording this on the 25th of October, and on the 26th, which is a Wednesday, we do hear from the Bank of Canada. And right now, the market is actually expecting the Bank of Canada to raise interest rates, not 75 basis points, but 50 basis points. So just adding to this whole idea that central banks are now going to be less hawkish going forward. And what I mean by that is essentially the large amounts or the large rate hikes are going to be, reduced, right, to 50 basis points. I think they'll still be technically hawkish in terms of the rhetoric they use for inflation as such, and that could cause some panic for the equity markets, because it does seem like a lot of the markets here are already calling essentially what we've been talking about, the Fed pivot or the central bank pivots, where rates will come or will be hiked very, very well in small amounts, and they'll have to be kept there for some time, right, in order to tame inflation. We'll see how the market reacts to that whole idea. I think a lot of people are already forecasting this idea that, hey, a recession is already here or around the corner, which is going to cause central banks to start decreasing or cutting interest rates, which I don't think, is something the central banks want to do right now, because, they don't want inflation to run out of control. And of course, if you're a contrarian, you're thinking that this rally here in the markets is going to be short-lived, because fundamentally rates will have to go much, much higher, because central banks are way behind the curve when it comes to chasing inflation. The whole idea, like the analogy is right now that, inflation is running like a Ferrari, and central banks are chasing that Ferrari with a golf cart, right? And maybe, with the European Central Bank and the Bank of England, maybe they're like a turtle or tortoise level in terms of speed, where they're behind the curve and they have to catch up. The US and of course Canada have raised rates quite a lot, and maybe they're close to that threshold where they can keep rates quite high and allow that inflation to slowly fall down. But again, folks, anything can happen from now till then. And I think even next week on Wednesday, on the 2nd of November, if Powell comes out quite hawkish with this whole idea that, hey, we're still going to be hiking rates. I don't know why, markets are still thinking that we're going to slow down if he comes up with a very, very hawkish rhetoric, or if the Fed hikes by 75 basis points. I think there might be this idea of the markets beginning to sort of reconcile this whole idea of a Fed pivot. But putting that aside, let's talk about the technicals. And, the technicals is something we've been talking about on the weekly charts and on the daily charts. I want to focus on the daily because a lot of the weekly zones have been broken, but we have said in the past that, these months from October to December tend to be the best months for the stock market. Historically, you tend to see a nice rise, and of course, there's that term, the Santa Claus rally in December. So I do personally think that markets will have some time to maybe rally, and then come next year, Q1, we might see sort of that flip. But again, central banks can change that, right, with their rhetoric come next week or even in December. But as of now, we want to trade the markets we see, not the markets that we hope to see or we want to see. And in my recent article, which actually came out on that Friday, on that 21st, I presented the daily charts of the S&P 500, the NASDAQ, and the Dow Jones. And I even said that, hey, folks, the Dow Jones is actually a buy trigger at this point right now, because we've had that breakout, we've had this retest, buyers are stepping in, it's triggered, right? A lot of these breakouts have triggered, except on the NASDAQ and the S&P 500, which are still waiting to break out of their daily resistance zone. So the Dow is leading, which I'm sort of surprised, because I tend to watch the small cap Russell 2000 as the leading market indicator. But as you can see, that Friday, we ended up quite strong with a nice higher low here on that retest and a continuation on the Dow Jones. So if you are an EG reader, that would have been a nice trade there on the Dow Jones. But you're now seeing that same rise here in the NASDAQ. We've broken back above a previous resistance zone. And I think the S&P chart here is just getting started as well with today's close. If we do close strong and green, we will break out of this resistance level. So it does seem like there is some more upside here for the equity markets on that daily chart. On the S&P 500, I'm looking maybe at this 41 to 4,200 level. I know some people might be surprised by that, but that's what I'm looking at from a technical perspective, as long as we remain above 3,800 here. And of course, again, folks, the Fed can change it all, right? If we are playing on the fundamentals, then the Fed could reverse this uptrend on the daily chart based on a more hawkish tone or a larger rate hike than the market is pricing in. On the NASDAQ, I think you can even see a run back up to the 13,000 level here, as long as we hold above 11,250. And then the Dow Jones, we're well above 30,000, which is sort of that resistance zone now support. So as long as we remain above this 30K zone, I think we can make a run back up to 33,600. And again, based on the technicals that we are seeing here. And I think it's important sometimes as traders and investors, I know sometimes it doesn't make sense, but we want to trade the markets that we see, not the markets that we hope to see. But I'm one of those that don't really think longer term that this inflation story and central banks raising interest rates is over just yet, unless we get some sort of major demand killing event. But a lot of people are betting that that's going to be a recession. But I think the recession might have to be quite severe for the Feds to or for central banks to start cutting rates too early, because I don't think they want to do that just now, because then the inflation will continue. And before I let you all go, I want to end with one stat here, which some people might not enjoy too much, but never in economic history has inflation fallen when interest rates are below the rate of inflation. So using that statistic, theoretically, interest rates will have to go much, much higher in order to start bringing down the rate of inflation. And of course, I know there's this big debate between supply chains inflation, but then the historic, monetary definition of inflation, of printing too much money. And sometimes that is getting muddled around these days. But I think it's important to also look at the money printing that is going on and take that in account for inflation that's being created. But that's it for me, folks. Let me know what you guys think of the equity markets here right now. Are you buying this bottom here on the daily chart? Do you think we see a rise in the next few months, and then maybe around Q1 2023, we begin to reverse again? Or do you think this is all a fake out and we give back these gains with a very, very hawkish Federal Reserve and central bank in the upcoming FOMC meeting, and they remain hawkish? They keep saying that they're going to be increasing those interest rates and have large rate hikes Let me know in the comments below. Be sure to give this video a thumbs up, and I'll catch you guys all in the next chart attack video.